stocks in that sector. I'm talking about the likes of Exxonmobil and Chevron. These two companies or these two stocks, they have a blown out profit, and you can even testify to it. The crude price is high everywhere in the world. It's not just by a little, it's a big one. It's wider than expected, even though the energy price has started dropping in the US and some other countries, but it is still big difference between now and what we have now and last year. So you can expect that their profit margin is huge. The two companies declared their earnings and it's smashing. They smashed their earnings. With the inflation, with the rise of price of gas in Europe, OPEC issue, Ukraine and Russia, Biden traveling to the Middle East, Saudi Arabia to speak on whether they will increase the output of oil. They are making a kill out of all this, and people are beginning to think that, oh, while a lot of other people are suffering, these companies are making a huge profit. Hey guys, they have to make profit. It is not them that are increasing. It is the business. It is how it is. As a result of the maybe the sanction on Russia and all this geopolitical tension, the companies in oil industry are making a kill. I mean, when I mean oil, I mean energy as a sector. Now, let's have a look at the detail of their earnings. Let's start with ExxonMobil. ExxonMobil actual revenue is 115.68 billion. What was expected by analysts was 119.4 billion. The EPS is $4.14. What was expected was at $3.98. But guess what? It's huge. It's smashing. That of Chevron actual revenue is 68.76 billion, while the estimate was 58.84 billion. The adjusted EPS is $5.82. What was expected was $4.97. When I say what was expected, that means by the analyst consensus. However, these two companies, they smashed it and they made huge profit. And if you're a shareholder, you should be excited. You should be happy about this. It doesn't matter. Hey, this is life. Some people are crying, some people are dying, some people will smile. When you complain that you don't have money, some people have money. That's the reality of life. It is never balanced. So if you're a shareholder, you should be excited, because these two companies, some years ago, you would think they are going into extinct. Of course, with the EVs, people started talking about like Tesla, all this Ford, GM, that maybe crude, gasoline cars will not be the thing again. Hey, life, things can change within a tick of a second. You don't know. So these two companies are doing well. As a shareholder, you should be excited. Let's have a look at the chart. Let's have a look at the price action. If there's any information we can also get on the price action, and we also have a look at the details of the earnings. Let's have a look.
Here is the technical chart for ExxonMobil. You don't need a soothsayer to tell you that ExxonMobil has done extremely well, even looking at the technical chart. Anyway, let's start with the fundamental. The EPS rating is 81, and the P ratio is 10. The market cap is 394.25 billion. Shares outstanding is 4212.5 million. Uh, these are the EPS in the last couple of years, and the estimate for um, earnings to come. But look at this, yeah. Some few years ago, 2020, it was a negative. Negative. Now look at it. 5, 12.12, 10.19. That's the estimate. So you can see ExxonMobil has done extremely well. I mean, we all see the gas, the energy crisis, the geopolitical tension, which are it has helped the crude oil I mean, sorry, the crude market, Russia and Ukraine. Let's have a look at the weekly chart for more fundamental information. Here, shares in float is 4170.4. Here, here is the main deal. The real deal is 52 weeks high to 52 weeks low. 52 weeks high is 105, and 52 weeks low is 57. Now, look at it. It is trading 10% off the 52 weeks high, while most stocks are trading either 70% or 50%. It's trading 10% off. Um, let's have a look at owners. I know that Warren Buffett has considerable share in Chevron and Exxonmobil, and I think one of those energy or so. Now funds have 32%, banks 1%. Let's look at the metric. Benjamin Graham 8 out of 13. Let's see Warren Buffett. Warren Buffett 9 out of 16. Let's see Peter Lynch. Peter Lynch is 3 out of 8. What we're looking at here is this. These are super investors. Over the years they have their own benchmark criteria, metrics. That meet if a stock meets some numbers of the benchmark. You could go for the stocks. In a way. Let's look at technical. Technical. It tells you that the ExxonMobil is trading above 10 weeks moving average, above 10 weeks moving average, and it's below 40 weeks moving average. Now, you don't need a soothsayer to tell you. As you can see, this is a cup, which is a bullish sign. Once you have this type of technical drawing signal, this is to tell you that it's a bullish run. And you can see this stock has been bullish. In fact, let me draw this for you to see. It has been a bullish run. You know, this stock has been bullish. It was, the correction and everything. It didn't really affect the energy stocks, and as you can see, it's a um, bullish run. Let's have a look at it on a daily chart. On a daily chart, it's the same thing. It has been bullish. This stock has been bullish. ExxonMobil has been bullish. So, guys, be careful. I'm not sure this is the right time to invest in ExxonMobil, but let's have a look at Chevron as well. Chevron, Chevron and ExxonMobil. I'm not sure this is the right time to invest in them. Chevron EPS rating is 81. The P ratio is 11. The market cap is 313.45 billion. Shares outstanding is 1964.8 million. Funds owned 33%. Let's have a look at checklist. 3 out of 8 for Peter Lynch. I want to see that of Warren Buffett, because Warren Buffett owns a considerable share of Chevron. It's 7 out of 16. 7 out of 16. Come to think of it, some few years ago, many people thought the likes of ExxonMobil and Chevron would go into extinct because of the how people were moving away from fossil fuel to green energy, electric cars, and But at the end of the day, this is why when you invest in a value company, you hold your investment. You never know how it will go. No one foresaw that, and there will be invasion of Ukraine by Russia. This, I mean, energy has done really, really well. Let's have a look at it on a weekly chart. On a weekly chart, here, as you can see, 52 weeks high is 182, and 52 weeks low is $40. Um, it is trading 12% off 52 weeks high, while ExxonMobil is 10%. You see, these both stocks have done really well during this energy crisis. It is not their own making. However, uh, that doesn't say they cannot make money. So as you can see, it's a bullish move. Guys, be careful.
Seen the chart, you've seen the price action, and you've seen details of the earnings. Be careful. I don't think this is the right time to jump on these stocks now. Be careful, do your analysis, do your valuation. Be sure that you're getting this price at the intrinsic value. Be sure that you're not paying exorbitant amount for these stocks, because remember, we're still within the bear market environment. There's still inflation out there. The Fed is still increasing interest rate. There's a lot of reasons why you should be careful before getting any of these stocks. Do your valuation. Thank you for watching this channel. Thank you for subscribing. We'll continue to produce content that will support your investment journey. Thank you. Please call again.